Hello and welcome to BYJU'S Exam Prep IAS. Welcome to another session on economy this week, wherein we are taking up all the important economy related articles from 30th of July to 5th of August 2022 and we'll be analyzing these particular articles. Let's begin the discussion. The first article, I'm pretty sure you must have heard of this or read about this in recent times, the freebies by the state governments and the concerns related to these particular freebies which are doled out or let's say given by the state government to its respective population or people in the respective states. Now what is the issue or what is the concern? Just like the central government, even the states have lot of welfare schemes, have provided lot of subsidies, and in recent times because of the financial pressure on the state governments, there is a rising concern that the state governments are spending a lot of money in case of providing freebies or let's say the subsidies under various schemes or under various programs. Now this concern has been raised because there was a report that was published by Reserve Bank of India. In addition to this, what happened in Sri Lanka also has raised the alarm bells amongst various economic experts, including Government of India by the way, which is raising a concern saying that the states have to withdraw or scale back these particular freebies or subsidies. Now many of you would be concerned saying that, sir, when you talk about let's say freebie or these kind of subsidies, what do you mean by this? I'll use the definition that has been given by Reserve Bank of India itself. RBI says that a freebie, that is a dole out that is given by the government, state government by the way, basically will have these kind of characteristics. That is, one, it will undermine credit culture in the market. For example, let's say a state government announces a loan waiver that will undermine a credit culture. And many of the times the RBI governors over a period of time have raised concerns over these kind of freebies or the populist measures which are announced by the state government whenever the elections are nearby. In addition to this, it will distort prices through cross-subsidization. Now this particular term is important. Many of the times in the last 1 month, the term cross-subsidization has been appearing in the newspaper. Please be very, very careful. The meaning of the cross-subsidization is that the government will provide the good or a service to different consumers in the market. But for some of the consumers or group of consumers, the prices charged are very, very low. And to other consumers, the prices charged are very, very high. For example, generally we find cross-subsidization in railways, cross-subsidization in the electricity sector, etc. It will erode private sector investment. It will disincentivize the work at the current wages, and it will lead to reduction in the labor force participation rate. So whenever any kind of a dole out or let's say assistance or the subsidy given by the government meets any one of these particular criteria, RBI says it's a freebie. And what is the concern here? Some of you might simply say, sir, you are simply targeting the state government. Even the central government provides a lot of subsidies. The argument to this is very simple. Central government provides a lot of the merit subsidies in terms of healthcare, in terms of education, etc., which have a lot of higher or let's say positive spillover effects. Whereas a state government, when it provides subsidies in the form of let's say free electricity, in many of the states you must have seen the state government announces free electricity for particular set of households, will announce free electricity for irrigation purposes in the agriculture sector. Now before you jump to the conclusion, sir, you are anti-poor people or you are anti-farmers in India, please understand the argument here. The argument is whenever you provide free irrigation electricity, that is electricity for pumping out the water, farmers rather than using it will abuse it, exploit the groundwater. As a result of this, the groundwater level in case of India has been depleting. Look at many of the states where this is one of the major concern. And when you consume more and more electricity provided free of a cost to households, and majority of the electricity comes from let's say thermal or coal energy, the coal energy production is polluting. So understand the logic here. Some of the subsidies are merit subsidies. These are required. But whereas those particular subsidies or let's say freebies which are given by the states, there is always a concern related to that. This is the first one. Second, the governments, the state governments again and again will keep on hammering the point that their finances are under a lot of pressure. They have been forced to borrow more and more from the market, especially during pandemic or as a result of the pandemic. Now the argument is, if your finances are already under stress, why do you provide so much amount of freebies, especially when the elections are around the corner? In fact, I want to add one more current affairs point here. Very recently, Supreme Court of India has made a note of this particular point and stated that can we have a committee or a panel to look into what is the concept of populist measures? How can we control these particular populist measures? One of the recommendations that have been given by various experts is this. Because the center is needed to provide permission, that is, whenever the states which owes a certain amount of money to the center and the state wants to borrow, it needs to take the permission of the central government. So under Article 293, so the argument is, why doesn't central government simply impose certain restrictions on the states? Now the concern is very simple here. If the central government imposes certain restrictions on the states not to announce these kind of populist measures, then at the local level, that is at the state level, the central government is concerned that the party which is having the government or which has formed the government at the state level will portray the central government as anti-poor people or anti this particular state. That is one of the biggest concerns, which is more of a political nature here. So coming back to the point, the concerns are very simple. Finances of the states are under pressure. So the states should draw back, right? Basically scale back these kind of freebies. Whenever these kind of freebies are provided, it will also put a lot of pressure on the capital expenditure. Understand the logic here. If a state has, let's say, 100 rupees, and out of 100 rupees, imagine if 60 rupees is being spent on these kind of expenditures, the amount that is left for capital expenditure will come under pressure. There will be lowering of capex that will affect recovery in the economy. Revenue deficit increases. The fiscal deficit of the states increases. And as per various reports which has been quoted even in this particular article, the fiscal deficit of the states varies between 2.8% to 4.56%. That is somewhere in the range of 2.8% to 4.6%. Whereas under the FRBM document, you are supposed to maintain the fiscal deficit at 3%. So the argument is simple. Revenue deficit is high. Fiscal deficit is high. States are forced to borrow more and more money from the market. And when these borrowings are done, they are not using it to promote recovery. They are not using it to promote development of infrastructure. Rather, the states are providing a lot of freebies to the people living in the state. So these are some of the concerns which have been raised in the article on the freebies by the states. Now, based on this discussion, I have given one descriptive question here. Subsidies are politicians' delight and an economist nightmare. Elaborate this particular statement in 250 words. Straightforward question, try it out. One more article, because we are discussing at the state level, the finances at the state level. What about the finances at the central level? The fiscal deficit of the central government is supposed to be kept at 6.4%. But because of reduction in the excise duties on the fuels, the government expects the revenue to be affected or tax receipts to be affected. At this particular point of time, Government of India is taking certain measures to rationalize expenditure. Because understand the logic here, you can control the revenue deficit and the fiscal deficit, right, in different ways. For example, you can increase the tax receipts, that is the income that you are earning, the deficit is expected to come down. You can reduce the expenditure, that will also reduce the fiscal deficit. Or you can do both of them simultaneously. You can increase the amount of tax receipt collected, non-tax receipts collection, and at the same point of time, reduce the amount of expenditure that will control the fiscal deficit. Now the government, in order to control the expenditures, is taking certain measures, and that is what has been discussed in this particular article. What are these measures? First thing, Government of India has announced that It will have a look at all these particular schemes which are not providing any benefit right now. Benefit in the sense, it was introduced with certain objective and these schemes are not meeting these particular objectives now. For example, the scheme that has been quoted in the article is PAHAL scheme, or in simple terms, direct benefit transfer in LPG. And the government says, when we introduce this particular scheme, direct benefit transfer in LPG, the objective was that the beneficiary has to purchase the cylinder at market prices, and rather than giving the subsidies to, let's say, a distribution company, we will simply provide or transfer this particular subsidy into the bank account of the beneficiary. And because the beneficiary is directly receiving the money into the bank account, we will be able to address the issue of duplication of the beneficiaries, we will be weeding out duplicate connections, we will be weeding out the issue of diversion of these particular subsidized LPG cylinders. With these objectives, the LPG scheme or the DBTL scheme was introduced in 2013, and over a period of time, no doubt, the subsidy laid out or subsidy incurred by the government has actually come down. But right now the government says the objective, most important objective that we set up or launched the PAHAL scheme was to ensure that the beneficiaries who have sufficient amount of resources should come out voluntarily say, I don't need these particular subsidies. Right? That is give it up campaign as such. But that is not happening right now. And that's a reason we want to simply withdraw the PAHAL scheme or direct benefit transfer in LPG scheme. And as such, please understand the data is very clear here. For financial year 23, the amount of allocation that has been done by the government is just 800 crore rupees. But having said so, look at the other point also. The total amount of subsidy that has been kept by the government is around 6,000 crore. I am simply rounding off the number. Is around 6,000 crore rupees for LPG subsidy. Some of you might be confused. Sir, here you say around 800 crore, but the total amount of LPG subsidy is around 6,000 crores. How do you consolidate both the numbers? There's a mismatch. No, nothing wrong with both the data. Both the data are correct. The reason the numbers are different is, apart from the subsidy given under the PAHAL scheme, Government of India under PM Ujjwala scheme also provides certain amount of subsidy for the households or identified beneficiaries to get the LPG cylinders. That's the reason the LPG cylinder total subsidy is higher. That's the first point. Second very important point is they want to weed out the duplicate accounts or let's say duplicate beneficiaries under Manrega. The article simply gives a data before the pandemic. Before the pandemic, the total number of beneficiaries under Manrega scheme was 50 million. And during the pandemic, coverage has increased. The coverage has reached 70 million beneficiaries. Now, even though pandemic is over, the number of beneficiaries is not declining. The government simply says there could be certain duplicate accounts, false beneficiaries, etc., ghost beneficiaries within this particular data. So, we want to reduce this expenditure also. And the third very important point that has been mentioned here is the Food Corporation of India, FCI. Government of India incurs a huge amount of food subsidy. And now government says it has directed the ministry or the line departments to look at various points such as transportation, warehousing, logistics, etc. and try to minimize the expenditures wherever it is possible. But please remember this, government is not saying we will reduce the procurement. Rather, government is saying we have told if we can reduce or we have told the department to reduce expenditure in other areas such as transportation, logistics, but not in procurement. So these are the three very important points which have been mentioned in terms of rationalizing the expenditure of the central government in the article. Next important article is regarding global bullion exchange. Bullion basically is the metals, precious metals such as silver and gold. Generally, rather than maintaining in the form of let's say jewelry, whenever these particular metals are maintained in the form of let's say bars, right, these are called as a bullion. For the first time, Government of India has announced setting up or established this particular global bullion exchange in India. Where in India? Govt IFSC. In the Govt IFSC, International Financial Services Center, Government of India has set up IIBX. Remember the extension, International Bullion, that is India International Bullion Exchange. So this will be the first global bullion exchange that has been set up in India. Now what do you mean by this particular exchange here? Right now, whenever the gold is imported, RBI will give authority, or let's say RBI will allow the entities which are allowed to import and sell the gold in the market. But there is no market which is consolidated market in India to determine the prices of the gold in a transparent methodology. There is always concern with respect to arriving at the market prices of the gold. There is concern regarding purity of the gold, etc. Looking at all of these particular factors, 2 years ago, Government of India in the budget announced that we will be setting up the global bullion exchange or gold exchange market in India, and that has been established right now. What are the important points? The important points regarding this are the following. First thing, this particular exchange will facilitate buying and selling of gold. Remember this, it will facilitate buying as well as selling of the gold. What kind of gold? Right, most importantly, imported gold. Why? Please remember this. India is one of the major importer of gold in the international market. In fact, it is the second largest importer of gold. The import of gold varies from 1 year to another year. You don't have to mug up the data. If you want the data, it is clearly given here. In the year 2020, the amount of import of gold was around 430 tons. In the very next year, that is in 2021, the import of gold increased to 1069 tons. And the value of the gold imported into India generally has been much higher. So India is the second largest importer of gold. First largest is obviously China. Second, we do not have a very good market, or let's say consolidated market, where buying and selling of the gold takes place. There is no transparency in terms of, let's say, fixing the price of the gold, or we do not have a very good market in terms of determining the price of the gold in the Indian market. Look at all of these particular factors. Government of India has announced IIBX. So first, it will facilitate buying and selling. Second very important point, who can trade, who can sell, who can buy gold in this particular market? Remember this, non-resident Indians, the financial institutions, and most importantly, jewelry companies. Most importantly, the jewelry companies can trade or can transact using this particular platform. These can buy and sell. Of course, please understand, can every NRI participate in this? Of course, no, there are certain conditions. Can every jewelry participate? No, there are certain conditions. These have to be empaneled. These are supposed to have a turnover of this much, etc. So if you meet all of these particular conditions, you are allowed to transact, that is buy and sell on this particular IIBX. Third very important point, who will regulate IIBX? For this, Government of India has announced one more very important authority, the International Financial Services Center Authority. Remember this, IFSCA, International Financial Services Centers Authority. IFSCA will regulate IIBX. So these are certain very important points in the context of the first gold exchange that has been inaugurated in India. Now based on this, I have given a question here. Consider the following statements regarding IIBX. This will be regulated by IFSCA. Statement 1 is correct. NRIs are not allowed to participate, right? This is wrong. This will be India's first bullion exchange. Statement is correct. 1 and 3 are correct. Right option is option C. And the object is very simple. When you have a market where all the imported gold is bought and sold in the form of, let's say, future, spot exchange, etc. Every buyer brings purchases the gold from this. Every seller sells the gold through this market. It will create one very good market in terms of fixing, or let's say determining the market prices. Transparency in the market prices will be one of the outcomes. It will also basically promote in terms of, let's say, standardization or the purification of purity of the gold. It will guarantee certain purity of the gold, etc. So these are certain very important points regarding IIBX. Let me go to the next article. Coal import target. What is the context here? Very simple, understand this. Couple of months ago, in the month of April and May, there was a concern regarding how much coal is present in India. And the concern was the demand for the coal was higher and the supply or the stocks which was there in India was depleting, was very, very low. At this particular point of time, Government of India introduced a guideline, asked the power producers, that is the thermal power producers, to import coal into India. Hope you understand this? Very simple logic. Demand was higher. There was a concern over the shortage of coal in the domestic market. Government of India asked all of these particular power producers, that is the thermal power producers, to import coal. How much coal? 10% of their total requirement. 10% of their total requirement. So imagine you require 10 tons of coal, then 10% of your requirement you will have to import, blend it, produce electricity, sell it in the market. Simple. Now the concern was very simple here. Government, in order to meet the supply of the coal, imposed this kind of a regulation. But the concern regarding this was the imported coal was very, very costly. How costly? Many of the experts have pointed out that the imported coal was 6 times costlier than the domestically available coal. 7 times costly, 8 times costly, in certain cases 10 times costly. So when you import coal, pay very, very high amount of a price, what will happen to the price of the electricity that you have produced? Obviously the price of the electricity would increase. So per unit, the tariffs increased by around 50 paisa or more than 50 paisa in certain states. And as a result of this, the states, when they sold the electricity, to consumers, they also sold the electricity at a higher cost. So it was basically borne, the or let's say higher cost of this electricity was put on the shoulders of the consumers. This was the major concern. Now, currently, what is there in the newspaper? Currently, the Government of India has looked at the coal availability situation and it is satisfied about the availability of the coal. And now the government says, this compulsory import of coal for blending purposes, this compulsory limit we are going to withdraw. We will not impose a restriction like this. Now you decide how much coal you want to import based on your requirement, based on how much is available, based on how much is required. You decide and you import the coal. However, if there is a requirement, if there is a requirement of increasing the stocks, or there is a requirement of, let's say, again, importing the coal ministry shall decide and everybody shall follow this. And in earlier situation, when the government had decided that the 10% of the requirement of the coal had to be imported, if a particular company doesn't meet this particular target, then the government said, we will simply increase the amount of import that you're supposed to do to 15% in the remaining period. If you don't meet the 10% limit, then we'll simply increase it to 15%, which you will have to meet by importing. So these are certain very important points regarding coal import conditions which were imposed by the government earlier. Next, related to power sector itself, but not related to coal, but somewhere others on the other side regarding recommendations. Very recently, a standing committee, that is a House panel, has given certain recommendations in order to rationalize power tariff. And what is this power tariff rationalization? Understand the logic here. Imagine this is a distribution company, obviously owned by the state government, because there is a private sector presence also in the distribution, but majority of the distribution is controlled by the state government owned entities, that is state government distribution companies, in short DISCOM. So imagine here is a DISCOM which is owned by the state government. Now this particular DISCOM will purchase electricity from a generation company and will sell the electricity and collect the tariff, collect the amount and pay the money to a Genco or generation company. What has been a stagnant feature, or let's say a continued feature in case of India's electricity sector, has been that the generation companies have come under a lot of pressure because the distribution companies which have purchased electricity have not been able to generate sufficient amount of revenue and repay the amount or pay the amount for the electricity that they have purchased. And this is happening for a very simple reason. The distribution companies are selling the electricity at different prices to different customers or consumers in the market. Because of, let's say, a concept of cross subsidization, where different prices are charged for different consumers in the market, in certain states there are more than 50 types of tariffs. That's the tariff structure. There are 50 types of tariffs maintained by these particular states, and this is affecting the revenues of the distribution companies. They owe more than 1 lakh crore rupees to the generation companies, and a large number of distribution companies are also incurring losses. So this House panel, this particular committee has recommended that we need to change the tariff structure in India. To begin with, this committee says that we need to categorize all of these consumers under 5 heads. I repeat, we need to categorize all of these particular consumers under 5 heads. That is domestic, agriculture, commercial, industrial and institutional. And start moving towards, after you do that, start moving towards a single tariff structure, single rate structure which should be imposed on all of these particular consumers. That is very important recommendation that has been provided by the House panel. In addition to this, many of the states provide free of a cost electricity or at a very subsidized rates the electricity to agriculture sector. The recommendation of this particular panel is that we should divide the feeders. We should have a separate feeder to supply subsidized electricity or a free of cost electricity to agriculture sector, and a separate feeder to other consumers in the market. With this, the AT&C losses, that is aggregate technical and commercial losses, would automatically start going down. So these are some of the very important recommendations that have been provided by the House panel in order to rationalize the power tariff structure in the Indian electricity segment. Next article is regarding gold reserves. Right, what is the article about? First and foremost, understand the background, then we'll understand the importance of the article. All of you heard of RBI's function to maintain forex reserves. Amongst all the functions which are conducted by RBI, one of the very important functions is RBI maintains forex reserves. And very often in the newspaper you will come across a statement saying forex reserves have depleted by this much, forex reserves have increased by this much, accretion of this much, right, a reduction of this much, etc. So RBI's one of the main function or very important function is to maintain forex reserves. And these particular forex reserves, which is generally quoted in terms of dollars, remember this, it's not always in terms of dollars. That is, within the forex reserves, everything is not in dollars. We have foreign currency assets, we have gold tranche or a reserve tranche, we have SDRs at IMF, and the fourth very important component is gold reserves itself. Gold reserves itself. Now don't say that, sir, gold you have written twice. This is a gold tranche or a reserve tranche position at IMF. This is a gold reserve. And every central banker, or let's say most of the central banks, maintains a certain amount of a gold out of the total forex reserves. Reason is that gold is generally used or let's say purchased a lot during uncertain times. Whenever the inflation rate is very high, whenever the volatility in the forex market is very high, whenever there is uncertainty in the global market, generally people prefer, or let's say the central banks, investors, etc. prefer to purchase a lot of gold. Why? Gold is always used as a hedge against inflation. In a longer duration, gold prices are always increasing. Longer duration, don't look at short duration. Don't say, sir, yesterday gold prices have fallen down, but you are seeing something else. Look at the long duration, you will realize that the gold prices always have kept on increasing like this. So looking at all of this, the central banker of India, that is Reserve Bank of India, has started accumulating more and more gold reserves. Has it been happening in the recent times? No. If you look at the data here, you will realize that in second quarter or at the end of the second quarter in the 2018, the amount of a gold that was held in India was around 560 tons. That is, mind you, central banker, that is RBI. And in the next 3 or 4 financial years, that is by the end of the second quarter of financial year 22 and 23, the amount of a gold that has been held has increased to more than 768 tons. That is, in simple terms, it has increased by 36% in the last 4 or 5 years. The reason is simple. It's not just in case of the RBI. Many of the central bankers have kept on increasing the amount of gold that they are holding in the reserves. Reason is uncertainty has increased. The rupee value, or let's say the currency value against the dollar, has not been stable. There is uncertainty in the global market, etc. And as a result of this, amount of gold reserves held by the central bankers have increased. Now, in the context of RBI, the amount of gold reserves that are there, already I have given the data, it is more than 768 tons. But out of the total forex reserves, mind you, out of the total forex reserves, it simply comes at around 8%. That is, the 568 tons is simply 8% of the total forex reserves. And when you compare this with other countries, if you look at USA, in case of USA, 68% of the total forex reserves is in the form of gold reserves itself. If you talk about France, if you talk about Germany, Italy, etc., these countries have held a lot of their gold under the forex reserves. A lot of the amount has been held in the form of gold itself. And it makes sense for a simple reason. Look at India itself. In the foreign currency assets, you have held many of the foreign currencies as well as the instruments which are denominated in dollars. And because of rise in the yield rates in the international market, the market prices of these particular instruments have fallen down. And when the market prices will fall down, the value of the foreign currency assets will also automatically fall down. So in order to protect itself against these kind of volatilities, in order to protect its forex reserves, more and more countries' central bankers are diversifying their forex reserves, holding more and more gold reserves. So these are the points which have been provided in the article regarding the forex, or let's say the gold reserves here. Next article, Financial Inclusion Index, FII, Financial Inclusion Index. First point, FI index is published by Reserve Bank of India. Remember this. It is published by RBI, not by anyone else. RBI, Reserve Bank of India. It is published in the month of July. That is, it is an annual exercise published in the month of July. Although it is published in the month of July, remember the next point here. It is published right till the end of April of the previous financial year. For the duration till the end of April, the time is taken. Then the index is published in the month of July. Publication date is in July, but the time period considered ends in the month of April itself. In simple terms, after the year is over, that is the fiscal is over, after 3 months of the end of the fiscal, the data is published. Third, there is no base year which has been considered for the calculation of this. Remember this. No base year has been taken, because generally when you talk about index, there is always a base year. For example, CPI, base year is there. WPI base year is there. GDP base year is there. IIP, ICI, everything has a base year. All these are indices. But in case of Financial Inclusion Index, there is no base year. Fourth, numbers are allocated. Under the index, numbers are given 0 to 100. 0 being that is exclusion, complete financial exclusion, and 100 being complete financial inclusion, which means higher the index number for a particular year. Simple logic. Higher the index number for a particular year, which it simply signifies the fact that we are improving the financial inclusion. For example, have a look at the data here. For the financial year ending in the 31st March 2022, the index is 56.4. Index is 56.4. But the previous financial year, it was 53.9. So when the index increases, it simply means we have improved the financial inclusion. Next very important point, fifth very important point. For the calculation of this particular index, 3 parameters are considered. These particular 3 parameters are the usage, access, and quality. Usage, access, and quality, right? So quality has been allocated 20% weightage, remaining 45% and 35% weightage, totally 100%. Having said so, these particular parameters have been further divided into different indicators. So totally there are 97 such indicators where the performance of the economy in terms of promotion of financial inclusion is measured, and the index will be published by Reserve Bank of India. So these are certain very important points in the context of Financial Inclusion Index, which is published by RBI, and as such the data already have given it to you. It is 56.4 for the financial year ending on 31st March of 2022. Compared to previous year, there has been an improvement in this. Now based on this, I have given a question here. Consider the following statements regarding FI index. It is published annually by the World Bank. Wrong. Now here itself, I just want to give you one very simple homework. Just like Financial Inclusion Index, there is also one index which is published for inclusive growth. Which authority publishes it? Hope you understand this? There is one index which is published for inclusive growth. Which authority publishes inclusive growth index? For calculation, the base year 11 and 12 is taken as a base year. Wrong. 11 and 12 is a base year for various indices but not for the FI index. It considers 3 parameters further divided into 97 indicators. Correct? With the rise in the index, it means financial inclusion is also increasing. Statement is correct. 3 and 4 are correct. Right option is option C, 3 and 4. Next article, service exports may beat recession woes, hit record $300 billion. Last financial year, Government of India had set up a target of 400 billion worth of merchandise exports, not service exports, merchandise exports. And for the current financial year, Government of India set up a target of $350 billion of service exports. In that context, earlier there was some article, there was some skepticism regarding whether we will be able to meet this particular target because there is a concern of recession in some of the markets to which we are exporting. For example, there is a concern of recession in USA, there is a concern of recession taking place even in the European market. Because India exports a lot of the services to these markets, if that country experiences recession, that market experiences recession, our exports would be affected to these particular markets. That was the concern which was raised. And this article discusses something else exactly opposite of what was the concern raised by the various economists or experts regarding that. As per one set of experts, if there is a recession in the US market, European market, to which we are exporting, our exports would get affected, our service exports would come down. Agreed. But this article discusses exactly opposite point. This article says that when recession will hit, or let's say a slowdown will have an impact on the markets of USA and European Union, the companies which are set up there will start outsourcing the services to Indian companies. Why? Compared to those particular countries, the services are cheaper. That is, they can get access to the services at a very cheaper rate in the Indian market. So it is expected that with recession or a slowdown taking place in the two markets, very important markets for us, the exports of services from India would increase and the exports of services for the current financial year, that is financial year 23, is expected to grow at a record rate, that is right at a very high rate of 18% and reach a total worth of $300 billion worth of exports for the current financial year. So these are certain important points which have been provided in the article. Beyond that, above and over these particular points, if you want, you can have a look at the imports as well as export of services in the last 5 years. Because UPSC has that tendency, although I am saying tendency, last year, that is basically for the 2022 UPSC prelims, there was no question on trend based. But anyways, next year suddenly UPSC can ask you that. So have a look at the data here. What has happened to the services exports, services imports for the last 5 years? Has it consistently increased? Has it consistently decreased for both imports as well as exports? So these are certain points regarding services exports. Next article, just a factual information here. One district, one product. ODOP, one district, one product. Now what is this one district, one product? Simple. Government of India earlier stated that right now the growth is happening in certain regions and other areas are getting excluded, are being left out of growth. In order to promote growth across all the districts in India, Government of India proposed or implemented a scheme by the name of ODOP, one district, one product. Under one district, one product, the objective was that we are going to identify a product which has a huge amount of export potential, and any issue, any bottleneck with respect to the production and export of this particular good, will try to address those particular issues. If you understand this, for example, imagine in your district, this product is manufactured and has a huge export potential. Now the government, I'll come to that also, government will try to identify what are the issues, what is holding back the export of this particular product to the international market. They will identify the issues, that is the bottlenecks here, and try to resolve or address these particular bottlenecks so that the exports can be promoted from these districts to international market. Now with the production and exports, what is the outcome? One, the economic activity in these centers will improve. The districts will be developed as export hubs. Economic activity will improve. Exports will increase from India. The investment will improve. Employment will also improve. Production increases. All these are the objectives of the scheme by the name of one district, one product. Now to identify the issues, what they proposed was, at the state level, there will be State Export Promotion Committee, and at the district level, there will be a District Export Promotion Committee. SEPC and DEPC will be established. It will be the responsibility of these committees to identify the bottlenecks or the issues which are holding back the exports. And then export plans will be prepared, and these plans will be utilized to promote exports from the districts to the international market. The update is very simple here. 557 districts under ODOP initiative, right, have prepared these particular export plans, and 218 district export promotion committees have already adopted these particular plans. This is an update, right? Apart from that, everything else is information regarding the ODOP itself, right? So update is very simple. More than 550 districts have readied the plan, and more than 210 or 218 districts have already adopted the plan. So this is the information provided in the article regarding one district, one product scheme. And one more very important point here, just factual information. ODOP for operational purposes, remember this, ODOP for operational purposes has been merged with another scheme, that is developing districts as export hubs, DEH, developing districts as export hubs, right? This is the initiative of DGFT, which functions under the Department of Commerce, obviously under the Ministry of Commerce. So these are certain points regarding the ODOP scheme. The last article for the day, motorcycle ban in Nigeria, which is being discussed. What is this idea? Why are we discussing motorcycle ban in Nigeria with UPSC connection? Simple. There is always a context of spillover effects. That is some initiative or let's say certain action taken in one part of the global market, which seems to have no connection within India, but in reality, the action taken in the global market or some other country will have an impact on the Indian market. This is called as a spillover effect, right? Two actions or two outcomes, right? Two activities which have no connection whatsoever are connected to each other. That is called as a spillover effect. It could have a positive spillover effect. There could also be a negative spillover effect. This article discusses the concept of a negative spillover effect. What is the discussion here? The two-wheeler as well as the three-wheeler manufacturers in India, such as Hero, Bajaj, etc., have manufactured or have been manufacturing these particular vehicles and exporting these vehicles to many other countries. For example, we export to Sri Lanka, we export to Nigeria and many other countries within Africa. Now the concern is, in recent times, because of the economic turmoil that has been happening in case of Sri Lanka, these exports from India have been affected. Simple. Because in Sri Lanka, people are concerned about getting access to foods, getting access to, let's say, livelihood, rather than buying newer vehicles. So India's exports to these particular countries already are there is certain impact here. In addition to this, because the two-wheelers, right, this is a funny thing, because two-wheelers have been used in various, right, let's say illegal activities, right, much more sinister, terrorist activities in Nigeria. the government in Nigeria has been thinking of banning usage of motorcycles altogether. They want to ban two-wheelers altogether. Now, what is the connection with this, right? With Indian manufacturers. India manufactures two-wheelers and exports a lot of these particular two-wheelers to Nigeria. That's the first point. Second point is, already in one of the cities there, right, that is Lagos, one of the biggest cities in Nigeria, such clampdown has already happened. A banning of the motorcycles has already taken place. Now, if this is done throughout this particular country, then India's two-wheeler exports to this country would be affected. That's the first outcome. Second outcome, these two-wheelers are being used as a taxis, right? Motor taxes or two-wheeler taxes, just like we have Rapido in India, there is two-wheeler taxes even in Nigeria. And there are more than 5 million people, okay, more than 5 million people, right, who will be affected if the government in Nigeria bans usage of the two-wheelers. And is it just the 5 million people who are, let's say, using these particular two-wheelers for transportation or as taxis who will be affected? No. There are many other people who will be affected because these are, let's say, cleaners. These are, let's say, the mechanics, etc. So, not only 5 million people, in addition to this, another 15 million people who are indirectly dependent on this particular segment will also be affected if the government there imposes a ban on the usage of motorcycles. So, an activity or let's say an action taken in Nigeria by the Nigerian government is going to have an impact on the auto manufacturers in India. And so, this is the gist of the article provided here. So, these are the various articles as well as the questions related to the articles for the duration 30th July to 5th of August 2022. If you like the initiative, hit the like button, provide your valuable comments in the section below, and if you have not yet subscribed to BYJU'S Exam Prep IAS, kindly do now. Thank you. Have a great day.